Hi, I'm Tyler Laundon, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, and I'm here with your Cabot Weekly Review. I'm recording this on Friday, June 2nd at about 12:40 Eastern Time. And as you can see here, S&P 500 up a little more than 1% today. So, really not a bad week for the market. Pretty constructive, really. I think we headed in, if we go back to last week, we had all this, debate going on over the debt ceiling, that back and forth. And we headed into last weekend thinking, it was probably going to happen, but we're not really sure. Here we are a week later, basically a done deal. So the market has really powered through all of that uncertainty relatively unscathed. Certainly a heck of a lot better than it did the last time this happened. As far as the other macro, big picture stuff, we had some manufacturing data this week that was pretty disappointing, but then the jobs data just continues to come in and look like pretty strong. So plenty of job openings were reported midweek in the JOLTS report, some wage growth slowing evidence. Then this morning, non-farm payroll report came out, kind of a shocker really, showing a lot more jobs were added in May than were expected. And of course, this brings us back to the Fed, who wants to cool down the labor market, but is proving to be super resilient. So I guess if you dig into this morning's jobs report, there are some encouraging signs as far as the Fed is concerned, but still the takeaway is that the door is definitely still open for some more rate hikes over the summer. So if we go to kind of market expectations as far as rates are concerned, we'll just pull up the Fed Watch tool here because it's kind of handy and kind of neat to look at. So here we have current target rate of 500 to 5.25. So that's 5% to 5.25%. This is, of course, measured in basis points. We're looking at probabilities for the June 14th meeting. So that's the upcoming meeting, the one in a couple of weeks. And current market odds right now are 66% that the Fed is going to hold at 500 to 525 basis points. When we go out into July, to the July 26th meeting right here, we see that the current odds are 51% that they're going to hike by 25 basis points. From there, we go out to September, still looking at market odds at that 5.25 to 5.5. And when we go out into December, toward the end of the year, it's at 5 to 5.25. So, like I said, big picture, kind of market expectations right now are that we're going to get a pause in June, which I think is generally supportive for the market. And maybe we get a little more in July, but who knows? It's going to just depend on how this data continues to come in. So I think that's going to be the focus for investors next week, which it would be nice if we were moving away from watching the Fed so closely, but that's just, the world that we live in right now. The other thing this week that was going on is there were some late season earnings reports. So I want to get into those a little bit because a couple of these stocks are pretty closely watched by growth investors, starting here with Crowdstrike, which is a cybersecurity company specializing really in endpoint security. But it's kind of benefiting from this kind of return to best of breed players. And what I mean by that is we're seeing that a lot of customers that have maybe gotten a solution from one company and then gotten another solution from another are sort of gravitating toward a larger company that can offer almost all the solutions that it really needs. And I think Crowdstrike kind of falls into that theme, as does a company like HubSpot. Of course, on the really big side of things, you have companies like Microsoft that fit that description as well. But as far as cybersecurity, of course, so we're looking at Crowdstrike here. So report came out and, the stock was down. So it reported on Wednesday afternoon. The stock was down yesterday, pre-market, and then opened down, but came back throughout the day. And I think, big picture, they beat expectations. Revenue was up 42%, beat by a little bit. Earnings per share, 57 cents, was up 84% compared to last quarter. And guidance was increased by a bit, 34 million. So you kind of step back and investors wanted a little bit more, but when analyst notes came out, they're generally positive on what cybersecurity means for Crowdstrike right now and what the company is doing. And of course, there was they checked the little box by talking about AI on the conference call. They're doing some work with Amazon Web Services on some new AI applications. So, they're still expected to grow revenue by 35% this year, and earnings leverage should mean higher earnings per share growth. So EPS up around 55%. So it's a pretty attractive growth profile, and the stock is still down quite a bit from where it was during the peak of the pandemic. So that's CrowdStrike. A pretty interesting story. I'm not saying it's going to go up again next week. It's been on a nice run here for the last month and a half, but I think the earnings report was supportive enough that if the broad market can hold up, that the stock could continue to do okay. Another high-profile name, C3.ai, of course, still playing on the AI theme. Personally, not a huge fan of the stock right now. It reported in the midst of a huge run-up. So what they do, I'll pull up their company description here. So they build AI systems to help large companies with their digital transformation efforts. What happened, one of the things from the quarter was that they reported a decent number of new customers, but when you get into the details, some of those are pilot deals. Also, C3 is transitioning to a consumption-based business model, so sort of charging based on how much customers use the platform, which can be a little bit lumpy, and that these types of transitions definitely have some uncertainty. So again, stock's not for me, kind of sketchy, I think, in my view, just given the run-up and the details from the earnings report. But I wanted to highlight it because it did report this week, and I know a lot of people were watching it. Another company that reported is CHWY, sort of a blast from the past here. We used to own the name in Early Opportunities, so I still keep an eye on it. Had a nice reaction to the earnings report. Revenue guidance was okay, but I just don't see, it had a nice pop, so I think maybe a few investors are paying attention to it again, but I just don't see enough there to really, lead to a sustained rise in the stock. But again, it reported this week, so worth flagging. Who else did we have? Oh, Samsara reported so yesterday after the bell. Stock is up 30% today, so obviously drawing some eyeballs today. So revenue was up 43% to $204 million. Earnings per share of 2 cents beat by 3 cents. And as far as what they do, so IoT, Internet of Things play, but basically they have a software platform and devices that kind of track physical things, buildings, trucks, vehicles, fleet, telematics, that kind of thing. They've seen a pretty decent amount of interest in the last quarter in their non-transportation stuff. So for utilities and energy, also seen some supply chain improvements that are helping. But as far as full year guidance, they got a small boost, but there are still some questions, I think, big picture from the analysts that follow the stock about what the U.S. transportation market is going to look like for the rest of the year. So it's not a slam dunk. This isn't like a huge turnaround or whatever for IoT. But kind of interesting to watch. I think it's one to keep an eye on. Let's say that. But after a 30% rise today, it's not like some other stocks like Nvidia or something where they just reported a huge quarter and like huge raise to guidance, and the future looks like way better than people were expecting. It's just not that kind of story at the moment. Another company that's been on my radar this week, just because they reported last week, so this is Snowflake. The stock got pretty slammed last week, down 16.5% after it reported earnings. But you gotta get into the report and the transcript. The earnings call, which I listened to. They talk about AI and kind of what they're doing and how ultimately that will benefit them. But as a data play, as a data warehouse solution, they can't just like flip a switch and roll out an AI themed like chatbot or whatever that's going to revolutionize how customers like mine data and store data on Snowflake. It's a little deeper and more complicated than that. But I think investors took a step back, looked at the stock, what the company had to say, and kind of reevaluated. And of course, the broad market was up this week, so that helped. But kind of hard to ignore that the stock has been rising for the last 5 days and right back to where it was prior to the earnings call last week. So that is Snowflake. I think when we step back from all of the earnings reports this week, we look at like, the market is still really being powered by a relatively small number of stocks. They're mostly tech stocks. So the NASDAQ here continues to be, the best performing broad market index. And if we look at Microsoft, the stock really just looks terrific. Going back near previous highs. I'll go out to the weekly chart so you can see that. So yeah, it's not that far from its all-time highs. And of course, Apple is right in there. Also looking good. But I think really what we want to see for the market to be a little bit healthier is, more participation from sectors and stocks that haven't really been doing that well. So I'm not going to go through all of them, but if we step back and we look at some of the ETFs that just are sector ETFs, and kind of see what I'm talking about. Actually, let's do it for the small cap index, because the small cap index has really been underperforming because of the heavy weight of financials, industrials, that kind of thing. But so here's small cap discretionary, just really not looking that good. Small cap consumer staples, fine, but nothing spectacular. Energy's getting a nice boost today, but generally, not all that strong. Financials in small cap world, of course, for the regional banks is still pretty beat down. Healthcare, not great for small caps. Industrial is doing okay today, and this one actually does look okay kind of over the last couple of weeks as well. Technology for small caps is looking much stronger than anything else in small cap land, just like it is in large cap territory. But again, I think what we really need to see is we need to see a little bit wider participation from different types of stocks to help the broad market go higher. So a couple names that maybe that'll happen today. Maybe today could be a turnaround for some other types of names. So here we have Terex, TEX, manufacturer of heavy equipment for construction, mining, aerial lifts, materials management, that type of thing. Another kind of industrial name, Caterpillar. Obviously, we all know this one, doing pretty well today. Boeing, somebody flagged this for me, having a pretty decent little run here. And then if we look at back to software, some of these cloud software ETFs, like the Global X Cloud Computing is doing okay. And the WCLD, the Wisdom Tree Cloud ETF is also coming up a little bit. Of course, those are going to be oriented toward technology stocks, software stocks, but a lot of those have been really beaten down. So again, I think as we look into next week, for me, it's really about, can the market continue to hold up, and can some of these other underperforming sectors kind of fill in and improve the breadth of the market? And I think that's what's going to be needed as we go into the June FOMC meeting, if the market's going to be able to hold up through that. So that's all I've got for this week, guys. I hope you have a nice weekend, and we will be back in touch next week. Take care.